All right. I think we did it. I think we're live. What's up, everybody? Let me know in the chat if you can hear me because I'm not sure that I set this up properly. I did it? All right. That's good to hear. Sorry if the audio quality is not super good. I got the nice mic in the Alfalfa Pod studio, so we're using the Walmart microphone today. All right, well, welcome everybody to the very first episode of Magic Lines. I hope that you are all a part of history today. Thanks to everybody in the chat for joining. What's up? We got Nick, we got Crypto Dude, Marty, Calcium. What is up? Yeah, I hope I don't start a new trend of us dumping when we live stream, so that would be bad. All right, so yeah, I just wanted to share a few updates with you guys. If you've been following me in the Alfalfa Pod Discord in the Magic Lines channel, you know I haven't posted a lot of updates recently. I've been doing a lot of traveling. You're so welcome for streaming, Bushi Tong. No, this is not being filmed from a plane, but I will be flying Saturday morning, and I will be flying all the way across the world to Europe. So, yeah, hopefully the distance of the flight does not correlate with the impact on the market. I will probably be hedging before this trip because I think I'm like 7 for 7 on plane trips and crypto dumps at the moment. So pretty good track record there. 10 a.m. Saturday morning, I think I fly out. Anyway, yeah, let's take a look at some of the charts. I know that's why you guys are here. I'm excited to do this. We do some charting on the Alfalfa Pod from time to time, but you know, they always have to pull me off the stage with a little hook there. I can't go as deep as I want to. So first up, let's talk about the dollar. This is sort of the number one thing I'm watching right now. I feel like a lot of the world is hinging upon it. I'm going to take you through kind of what I'm seeing here and, you know, try to show you why I'm thinking what I'm thinking. I think those of you who've been following me know that I'm pretty bullish in the sort of medium to longer term, I would say. Kind of gotten out of the I've been quite the bear tard, you know, for a couple of years now. It's gotten a little bit exhausting, and I don't think there's a ton of value in shorting from these levels. Mostly still bullish on crypto, still bullish on the world in general, and looking to accumulate. But kind of think we might see some headwinds in the short term. So what I'm looking at when I look at the dollar here, obviously we had this huge move up in 2021. Dollar just absolutely ripped, and everything nuked along with it. And then you can see here in 2023, or excuse me, ripped up in 2022, and in 2023 we've nuked pretty hard. And it's not surprising that in this down move here, we've seen quite the up move in crypto, in spite of you know, what's happened lately. Bitcoin's still having a pretty decent year, but stonks especially have just absolutely mooned. And yeah, I think we're going to see an end to that for a little bit. So what happens when price moves super quickly is often you get these inefficiencies. So right here, see this little gap. Now this is on the monthly chart, right? And when we're charting, when we're drawing our lines, we want to pay a lot of attention to what is going on the higher time frames first, because the higher time frames dominate the smaller time frames. If the daily chart is bullish, but your monthly chart is bearish, the monthly is going to win out. So we always start at a super high level here, doing top-down analysis. So we had another move at the beginning of the year, right? We had this big move down, also created this huge, really big inefficiency here. So we got these two gaps. Now, often when price makes these impulse moves, it's seeking some sort of destination where it can sort of like find liquidity or to feel like an inefficiency. So it's not surprising that we sort of traded back down into this gap up from last year. Now, you can see when that happened, look at the wicks of these candles. All right, we ran this kind of critical May level here a bunch of times, and then ultimately ran all of these lows right here with this wick. And then we closed back inside of this range. This is a swing fail, right? When price kind of moves down, grabs all this liquidity, it fails to close below, pulls back above. This is generally a sign that you're going to be looking for higher prices. And you can see that August we moved up, September we moved up. Question is sort of like, where are we going to? What is the draw on liquidity here? So on the monthly, I see two very obvious targets for us. The first, right here, we got these equal highs. Price loves to seek equal highs. People have stops above here, right? So if you're like a huge whale, price moves up here, everybody becomes like a forced buyer. You can sit here passively absorbing their orders with your sells, and then price can kind of maybe move back lower again. But that's the first target. The second target here is this this gigantic inefficiency on the monthly. You'll often see price kind of maybe go to the 50% level there. So that's currently sitting at about $7.67. So that'd be a pretty big move up from here still if we go there. So we're about maybe a percent up from running those highs, and then we're 2.4% up from actually trading into this gap here. And you can see this a little better on the daily, right? We had this bearish structure, we break down, we run these lows, we break back above this high here, right? So now we have a bullish shift in structure, and you can see this price is just looking for higher, and like I said, these highs here are a logical target. Could also see the 50% of this particular range here as being a logical target. Another way to look at this, if you want to stay like super zoomed out, right? We could think of all of these price moves as swings in a way. So you've got your low here, we moved all the way up to here and down and then back up. All right, excuse me. Boom. So right in here, we have basically a gigantic monthly swing, right? And this is sort of our last swing up before we started moving lower. We haven't really put in a lower low yet because I like to see it close below here. But you could also make the argument that we want to trade sort of back into the mid-range of this leg up. And you can see that's pretty similar to this fair value gap. That would put us at about $1.08. So kind of bullish on the dollar right now. I don't see any evidence on the high time frame that we're going lower. And then if you zoom in, on the daily, like this is just up only. So hard to be super bullish on crypto here when you see this happening. As for when will this actually hit, I mean, if we just follow this trend all the way up, which I'm not saying that's going to happen, but that would put us in early November maybe for this this top in the dollar. right? So while this is happening, no bueno for our crypto coins, unfortunately. Now, Bitcoin, a lot of interesting stuff here. I want to stay super zoomed out for a moment, actually. I want to talk about something that's well, actually, before we do that, let's keep it a little simpler here. Let's just do a quick kind of top-down analysis on the Bitcoin chart, right? As far as this goes on the monthly, right? You got your low, you got your high, your higher low, you got your higher high, and then boom, we kind of go here, here, and then this is basically the leg that ruins us, right, and sends us to Hades. So if you're thinking about trading Bitcoin right now, right, you have to sort of acknowledge that this really high time frame structure is actually still bearish, right? So it's why we can be like kind of bullish on the weekly, but still ultimately run into trouble at some of these high time frame levels, like especially this zone right here. This is sort of the last move up that gave us this, what I think and hope is the capitulation leg down. So that's the bad news there. But the good news is, like, if we try to think about what that offers us for a trade, that's still about a 50% move up to the mid-range of this level here, low 40Ks. So I'm not sure if we're going to go up only bull market 120K straight from here. I'm sort of thinking about the next quarter, the next 2 quarters, and trying to position on the basis of that, right? So with that monthly context in mind, you can kind of zoom into I think actually the 2-week chart for Bitcoin is pretty clear, right? So we've got this high here, right, that created this swing low here, and then we have this final swing low here. Important to note that this candle closed below this low, so this is like a valid low, and that means that like our last high, the high that caused this low, is basically up here, right? So with this leg up here, what we did is we broke market structure to the upside. So as far as I'm concerned, we are now in a bullish structure on the 2-week, which is a pretty nice time frame. And things are pretty tricky over here at the top. So like a lot of people are sort of looking at this daily chart, right? And they're saying, okay, we put in a high here back in April, we dipped right here, put in a higher low on the BlackRock news, and then we put in a higher high here on the daily in July. So what a lot of people are doing is they're looking at this low here that we put in early summer, right around 25K-ish, 24.8K, and they're saying, okay, well, this is our market structure. Once we break this, it's sort of over. We're just going down now, because now we've broken the structure. I don't see it that way. So what I see is, like, looking at the higher time frame, we put in this high here in April. That high validated this swing low. In order to have a higher low validated, we don't just have to put in a high, in my opinion. I think some people will disagree with this, but we have to put in a close, right? So you can see here on the 2-week chart, we didn't have a close above this, right? And I believe if you look at the weekly as well, you can see no closes above this level. So as far as I'm concerned, this is basically still, the valid high. This is the valid low down here. So what that means is that if we run this low and trade down here, although people might be panicking, this, in my opinion, is still bullish market structure, right? You're still having the ability to buy in an uptrend, and I like that this will be taking place potentially while a bunch of people are absolutely freaking out, and people will be freaking out if Bitcoin trades down here, sub 20K. The bottom of this wick is 19.5K. I mean, that'd be pretty fun to go through. Solid, 25% down if we played that whole thing out. But because because we didn't put in that high, this to me is just this is just a giant range as far as I'm concerned right now. All of this. Sorry about that. All of this here, from this high to this low, is just like I'm seeing like sort of like an accumulation range, potentially. And it sort of makes sense that this would happen here because if you zoom out a little bit on this chart, again, you're going to see this zone here, super important zone. This is a weekly level. This is the last weekly up move we had before we had this huge final capitulation leg. Right around here, we were still looking okay. We're like, okay, we ran these summer lows, but we're trading at 29K. Everything's fine, and then boom, Nuketown. It's over, right? So what happens when you have moves like this is you're seeing a lot of people who bought here, right? Imagine you bought here, and now down here, you're 50% underwater. Your wife is telling you she's going to leave you. You're not feeling great. So when we get this move back up into this zone, a lot of people who bought here, and again, not just here in 2022, but think of all the people who bought down here. They're like, oh, I'm so smart. I bought this pullback right in the middle of the bull run, and I'm not taking profits because this is going to 500K. Oh, I bought this summer dip, and at here at 69K, they're like, oh, I'm not taking any profits. This is going to 500K. All of these people here are in a position where a significant chunk of them wants to get out from underwater in this zone, right? So it's completely understandable that we're not just going to come in here and just run through this on the first try, right? So I don't see anything crazy about that. Now, when you have price moves, it typically follows a particular pattern, right? You will have accumulation down here, price moves up, moves down, retests a prior area of demand, move back up again, retrace, move back up, right? And so on and so forth, right? This is all completely normal. You can see that we had this zone here. I'm going to flip back to the 2-week because it's a little clearer. And I'm going to get rid of this line. All right. So this zone here, super important. This is basically the last down move, where people filled their bags before we got this big push up here, right? And you can see that price has not ever come back into this zone here. So it seems highly probable to me that, there aren't a lot of people who are like, okay, after this kind of nuke, we're just going to accumulate down here, and then we're just going to push price up. That's not typically how price moves, right? So, a little price 101 for you guys, and, hopefully this is pretty useful to you. You typically have 3 phases of price, so this is kind of how I think about trading, how a lot of people think about trading who have thought, who have had similar training to me. You have a phase of accumulation, right, where price is sort of moving up and down in a range. this is where, your large players, the ones who are actually moving the market, you and I aren't moving the market, they're sort of accumulating these positions. After an accumulation phase, you typically have the manipulation phase, right? So you'll have these lows here. You will see price run these lows, look like it's going lower, only to sort of break back inside the range and start moving upwards, right? This is great for the large players because a lot of people buy here like, oh, look at all this support. I'm going to buy before the bull run, up only, leverage long, place my stops below here. Price goes below here. All of these people's stops, they're forced sellers. They're being, sold into large players' bags who are accumulating a spot position with passive limit orders. And once that happens, you also get people shorting the breakout and then putting their stops above here. So then price typically enters the final phase, which is where you have expansion upward, and then again distribution at the top, which is sort of like a reverse sideways accumulation where people are accumulating shorts, and then this whole cycle takes place over and over again. So the reason I do have pretty good spot bags here because in my mind, personally, I think this is going a lot higher. Whether I buy it, I bought a lot at like 26K. Whether I buy at 26K or 20K in my retirement account is not a huge concern for me. But in my trading account, I'm very cautious, and I don't have any speculative longs in my trading account right now. There's no leverage longs, and what I want to see to get long, and this is like a very high probability. We have a really nice setup right now, in my opinion, because we do have this sort of range here where price has been ranging, right? We have a kind of weak low right here, a low that a lot of people are kind of, they're looking at, but in my opinion is actually not that critical to the overall market structure. We also just placed this other equal low here. So we have two equal lows sitting here right above a zone that gave us this previous impulse up. So this is the perfect setup for the thing I'm talking about, which is that you have accumulation here, you have a manipulation move down into here, a fake out, a move back up, and then a break above this range, trapping all the people who shorted the breakdown, and then price can sort of expand higher. So that's my framework that I'm looking at Bitcoin with, over the next quarter, and sort of trying to position for that. Calcium, what percentage do you give Bitcoin hitting sub 20K in the next 6 months? Look, it's always really hard to assign percentages to these things. The bottom of this wick is technically, sub 20K. It would not shock me if we traded pretty low into this wick. Like if you zoom into the lower time frames, right, you can see this move up here that I've been talking about. Like this whole thing is all unmitigated inefficiencies, right? Price has not returned at all to here, right? You have just straight up gaps. You have this this daily low here, which I would be stunned if this daily low doesn't get taken. This would be kind of like an interesting target, price kind of coming down here, wiping this low and in here. I think it's an interesting question if we bottom here, ultimately lower here, but we could go all the way towards the bottom of this wick, in all honesty, and that would be sub 20K. But what are the odds that we break 20K in the next 6 months? I personally don't think it's very high. It's never zero. And it's probably never less than like 30%, realistically speaking. But if I can get 70-30 trades with really good risk to reward ratios, like I'm making I'm making a lot of I'm making a lot of money in the long run if I manage my risk properly. So I think the upside up here in the the 40Ks is a lot better than the downside risk here lower, and I like to make trades where my invalidation is clear. I think if you put on a trade down here, especially if you're not knife catching, right? Like you don't necessarily want to just blindly buy in this zone. You want to wait for this shift in market structure to the upside, and then you want to try to get in, around here, right? So you have the zone of interest here, you have the bearish structure here, you have the break of that bearish structure, bullish structure here, and then here is where you're trying to get in, and then you're placing stop losses, below the swing low here. So when all is said and done, like if you're given this setup, you're looking at a trade that looks something like, maybe you get in over here, maybe your stop is down here, and then like at a minimum, you're targeting, the highs here, right? We could just run the highs and go back down. That would be kind of evil, but it's certainly plausible. We have a couple targets here, right, on the monthly that I'm looking at, and you don't know ahead of time which of these targets price is ultimately going to hit, right? But the first one is this monthly imbalance, this gap here, likely the 50% of it. So that would be, 34.8K. That's actually the second target. Your first target is this high right here, right? At 32K. Your second target would be, 35K, and then your third target is probably going to be this monthly order block here. So this zone here, right? This is sort of the last up move before price kind of broke down. There's a lot going on in here, and like I might zoom into the weekly to see if there's like more information, and you can kind of see that we do have like a little we have a little gap up here. We did sort of fill it, but we didn't fill 50% of it. So it wouldn't shock me if this is ultimately where price goes, and that would probably be a good final target. But if you target all the way up there, right, you're looking at a very, very nice trade. You don't get trades like this very often, so it's important that they're pretty high risk reward. But this would be, 7 or 8 to 1, risk reward. So you can be wrong on this trade a lot, well over 50% of the time, and still make a lot of money. And like realistically speaking, of course it's possible we just straight up run this high right here. But I think like a more probable path for price is, to kind of come into this zone and then maybe kind of retest the top of this consolidation and then go higher. This is assuming the world doesn't fall apart. It is also a possible path that we actually just come up here and then we don't actually put in bullish monthly structure. We go back to new lows. That's sort of the nuclear scenario, and it is possible. So don't trade with leverage. But this entire range here, right? This is basically just like a big accumulation range. Here we'll ignore the COVID wick. Well, I drew that pretty accurately. But yeah, you'd be looking at about 10K if that wasn't the low. So I don't know. Keep that in mind. I don't think that's what's happening here. Like I'm sort of on board the idea that we are going to have like an ETF in the next year, like super high probability of an ETF. And I think if that's the case, then it's really hard to see like BlackRock ETF and then we go to 10K. Like I can totally see BlackRock ETF and we come up here, run this high, and everybody's like, woo, new bull, and then we just nuke like 50% back into the zone and go higher. Or it's possible that we could actually triple top it on BlackRock ETF and then again come back down, and then this entire thing is just a gigantic accumulation range, and then we just sit here for years. Also plausible. All these things are plausible, but like I said, I'm sort of just looking at the next 3 months and where the 3-month, 6-month trade is on the monthly and the weekly charts. And that is basically where I see it right now. So hopefully that made sense to you guys. If you have any questions, feel free to throw them in the chat, and I will do my best to answer. Take a little tea break here. All right, cool. So I want to share with you guys like another framework I have for looking at this Bitcoin trade. And again, I'm looking at Bitcoin because I think everything revolves around Bitcoin right now. Even as somebody who's like a longer term ETH maxi, right? It's very obvious that the most obvious, not the only catalyst, like something else could happen, but the most obvious catalyst in the near future is a Bitcoin ETF. And you know, I also do think there is like a decent chance that if you buy altcoins next cycle, you might actually even just underperform Bitcoin, because things could be a little different, at least in the first sort of ETF cycle. So I'm very concerned with what Bitcoin is doing. As Bitcoin goes from now, so goes the market. But I was introduced to like a very interesting theory last week called quarterly theory. And what quarterly theory is this idea that, you know, we talked a little earlier about like the phases of price, right? You've got your accumulation, you've got your manipulation, you've got your distribution, right? You got accumulation, and we've got manipulation, and we'll call this distribution / expansion. Who is my top Satoshi guess? I mean, it's probably number 1 Hal Finney and number 2 the CIA or the NSA. I'm sure you'd like I'm sure you're familiar with the NSA theories, Marty. I like them. They're really funny when you look into them. Not saying they're high probability, but anyway, these are sort of the phases that price moves in. You've got your accumulation, sideways, right? You've got manipulation, swing in the opposite direction, and then move up. And then our expansion distribution phase, price is going. This is the leg you really want to catch to make a bunch of money. Quarterly theory says there's like one additional phase here, call it the X phase, and the X phase can basically just be a continuation of this distribution phase here, right? And it was sort of originally thought out on like the yearly time frame, right? So it's called quarterly theory because you've got 4 quarters in the year, and the idea is that each part of the year typically represents one of these sort of mini market cycles: accumulation, manipulation, distribution, continuation of it, right? And there's two ways you can have a cycle taking place. You can have accumulation, manipulation, distribution, continuation, AMDX, and you can have X, AMD, right? And that's sort of how this goes. What's really interesting is that if you look at Bitcoin on like a really high time frame, let me see if I can get this thing in here. Okay. You can actually kind of, you can see this playing out. So I've got a Bitcoin chart up here going, to 2017 bull cycle, right? This leg up was obviously manipulation, faked everyone up and then dumped it the other way, right? The next quarter, the start of 2018, we had our distribution phase, right? Price expands down. Next quarter, we had a continuation of this, like some consolidation / slow bleed, right? And then in the third quarter of 2018, we had a very, very classic accumulation phase right here. Like this is just textbook accumulation. And then, of course, we had the Q4 2018 manipulation, the great manipulation, and we nuked super hard below this level, right? But as you know, this move was a fake out move because we immediately, next quarter, began moving higher into the distribution phase, into the start, of this sort of mini bull run that we're familiar with, right? Continuation, and that's the end of the cycle, AMDX. We then start a new cycle here, and this cycle starts with an X move, right? So we've got a continuation of this sort of basically consolidation, right? We just go sideways here, and then we have another accumulation phase, right? Sideways, and then look what we get after accumulation. We get manipulation. Fake move down, reverses back up, and this is sort of the catalyst to start the next bull run. We get, distribution back up, we get continuation of that. We get what I would classify here as sort of a vertical accumulation into the 20K level. You do see this sometimes, and then boom, we explode higher, so the last leg of this, not necessarily accumulation. And then look at what happens. We get manipulation, we put in a high, and then we get sort of the first move up here. But this move, as we know, was a fake move, because what do we get in the next quarter? We get distribution. So we go the opposite way, and we go back down, and off to Hades we went. We then went back into accumulation. Manipulation again. They got us twice. Boom. Look at that. Manipulation leg above the high. What happens next? Well, of course, we have our expansion in the other direction into the next quarter. We got a continuation of that in early 2022 into our sort of famous early June capitulation. And then here we are in 2022. What do we have? Look at that. Again, classic accumulation. What comes after accumulation? Manipulation. Fake move down. What comes after manipulation? Distribution. Expansion to the upside. Look at that. We go up, right? And now things sort of get interesting. So this cycle started with AMD. It has to finish with an X because we have to have AMDX or X AMD. So look at that. Sideways. This continuation is just a consolidation. And now, here we are coming into the end of the quarter, and we're sort of asked to think to ourselves, well, what is happening here? Is this an X? Is this sort of like a continuation? Or is this a new accumulation phase that's happening right now? Hopefully an accumulation phase to go higher, but it is also possible that this is like shorts accumulating, right? So let's assume that this is an accumulation phase, which I think that's what this is, right? That would mean that next quarter, Q4, we are scheduled for manipulation. And here's where things get really, really interesting. If you believe that this quarterly theory is going to continue playing out, by the way, if you've seen anybody else who's talked about this on crypto, let me know. I actually didn't snipe this from anybody, so be curious if anybody is talking on it and if they're sort of seeing the same stuff that I am. But the manipulation sort of tells you what direction like the accumulation is going to go, right? Is this zone here, right? Is this quarter? Is this sideways accumulation? Is this the accumulation of longs, or is this the accumulation of shorts? If it's the accumulation of shorts, what we would expect to see is a leg up from here, right? Fake out, go into this zone of interest, this gap. This is where everybody gets all horny, but then what actually happens is, boom, we go back inside this range here. And now this is actually manipulation for expansion to the downside, right? That's what we don't want to see. What I'm hoping to see is a move lower into the beginning of next quarter. The reason I want to see the move lower is because if that plays out, then we have a perfect manipulation fractal here in Q4 to the downside after a time of expansion. Manipulation to the downside and a reclaim back inside the range and a bullish break in structure would signify that the following quarter, and maybe even the remainder of Q4, like you could have early manipulation in Q4, then most of the quarter could actually be pretty bullish. But then you'd also expect Q1 of next year to be a continuation of this move. We get our D and a continuation upward. So I like this theory because it fits in really well with how prices behaved in the past. This works in all asset classes, by the way, and it also interestingly works on all time frames. This is where stuff gets like super, super, super interesting, because a month, right, can be broken down into 4 weeks, 4 quarters, and our months tend to follow a similar thing, right? So you had this here in April. You had an accumulation week, you had a manipulation week, you had distribution, and then you had like continuation of that, right? So this all sort of played out here in this particular fractal. This may have been like a quarterly fractal. You can also divide this. You could also do quarterly theory on quarters, right? But you could see the same thing happening here in October. So if this plays out, right, you would expect some accumulation. You would expect a manipulation leg up here, at some time in the month, and then expansion, downward, hopefully to our high time frame area of interest, right? This whole thing follows a cycle that a lot of I'm trained in the ways of a trader called ICT. I think a lot of people you guys follow on Twitter who trade are trained in ICT. It talks a lot about market maker theory, the market maker buy sell model, and a concept called power of 3. It's a very simple but very powerful concept: accumulation, manipulation, distribution. And again, this can happen on all sorts of time frames. You can have monthly accumulation, you can have daily accumulation, you can have minute accumulation. These things can kind of be playing out all on various time frames, but it's very possible here that in the higher time frame, this move in this box, accumulation, if we get this move down, this shaded box here would be your manipulation, and then as a trader, you're looking to identify that and then play this last move to the upside, your expansion into distribution. So that's kind of how I'm looking at this at a very high time frame, and you can actually see this playing out on this chart. Let me get a cleaner chart for you. But this is what happened here, right? Look at this. This is once you see this, you cannot stop on seeing this. So what do we have here? Sideways move, accumulation of longs, right? What do we get here? We get a manipulation to the downside. And then what follows that manipulation? We get expansion up, right? Accumulation, manipulation, distribution. Same shit up here, right? Look, you see this everywhere. I'm not going to change this time. It takes too much time. Accumulation of shorts up here. You got a manipulation leg above the high. There you go. And now you get your expansion leg down. 1, 2, 3. Happens all the time. Happens on, every time frame. Boom. Boom. And a boom. right? If you go into a chart, you can see this. You can see this constantly. You know, same thing happened here last bull run. Look at this. We had sideways. There's your accumulation. This little guy here, COVID. There's your manipulation. And then we have this glorious expansion leg up, right? So as a spot enjoyer, your goal is not necessarily to try to buy the peak of the manipulation, because it's hard to tell how down this move can go. But your goal is to identify when market structure has shifted, right? So if you were to trade the last cycle in hindsight, which is easier said than done, right? But you can kind of look at this with basic market structure. This is the high that put in this low here. Right? There's your low. When we break this high, we have a bullish market structure shift, right? So this zone here, this is the last downward swing of accumulation, right? That broke structure to the upside. What do you get here? This is when people were freaking out, by the way. We got this move right before the last bull run in the summer. We had this nasty, everybody's like, oh my God, break a structure. Look at this impulse candle down. If you knew how to read market structure, actually, you know, what you saw was you just had a nice retracement into this zone here, right? There's this zone. Price taps into it. I'm curious where this goes on the fib. Often you get like a tap into the 50%. In this instance, we didn't quite get that. Price taps in, but you can buy in here, and then you're off to the races, and you're basically never in drawdown, and you made like a huge multiple on your money. So that's how I think about entering this stuff, right? Same thing played out here, right? You had, this is the key high. We break above that, right? This zone here was where the break came from, right? But we actually also had all of this inefficiency down here, like all of these candles, right? So completely plausible for price to sort of run somewhere into the zone. But you could have entered somewhere in here, right? And then boom, you're up. So you're not necessarily chasing this move up here. You're waiting for the retrace after you get the structure break, knowing that this was manipulation. We're likely to have an expansion leg up, and boom, that's how you do this. So I'd be looking for a similar thing to play out here if I'm going to trade this, right? I want to see a move up here. I want to run this high. Another thing you commonly see is you'll see, so here's our leg down. This is our high. This is our low. Very common to see price retrace into the 50% and above. In this case, when you're going short, you want to be in a premium. So big players can be entering above here in a premium. We have this zone here. My hand is so shaky right now, God. But we have this entire. You would think I know how to use TradingView by now. This entire zone here has not been mitigated at all. So I suspect you're either going to see price sort of kind of run this high, get above the 50, and then dump down. But even more likely that we kind of come up here. This is, of course, like absent news. Like if an ETF gets approved tomorrow, like we're going to blow through this zone. But this is probably a more likely play to me. So we're going to, maybe allow shorts to sort of refill their bags here. This is also a really interesting thing to note. So if you pull up monthly ranges, you can sometimes get a lot of insights into price. For example, this is the June range, and if you, I remember after the grayscale thing happened, I tweeted out that if you wanted to hedge your underwater longs, that was probably a good point to do it. And look at where this traded to. See this 50% line here? This is the mid-range of the June range, which is basically containing price right now. You can see here's the June high, here's the June low. We deviated the high of the June, went back down, right? I'm assuming we're going to do the same thing, deviate the low here, and then come back up. But in the meantime, this mid-range is a super key level. You can see how after grayscale, boom, we tag that, and then back down we go. So it's not going to surprise me since premium lies up here above this high, if this leg up kind of goes in here and then dumps us lower. Like I was saying earlier, like I don't necessarily think I want to see price just go straight up from here, because if it does, I kind of think I have to kind of heavily take profits up here, because I'm sort of worried this might end up being a manipulation leg for like a big move down. Incidentally, if price does give me a run of this high, 28K or so before my trip, this is a really good spot to hedge, in all honesty. So if you're feeling a little bit buried, hedging above this like kind of 50% mark, above 28.4K or something, this is a good zone to do it, right? Because this high here is the protected high right now, right? We got this low came from this high, this low came from this high, right? So this is kind of where I see this market structure lying. If you hedge up here and then we just reclaim this high and retrace back down, like you can take off your hedge and lose almost nothing, and you've now had a bullish market structure shift, right? And you don't actually lose that much on your hedge, if you're wrong, and then you're protecting yourself against all of this downside, right? Like I think there's a very good chance we trade into the low 20,000s, and that this is a big move, right? You're talking about like if you can get a hedge off up here, you're hedging out like maybe like a 28, 29, maybe like a 30% move. That's pretty painful. Versus like if we just blow through everything, you hedge up here, maybe you take it off up here, you miss like 5%, miss like, I don't know, 7%. So I don't know, this is just how I kind of think about risk management. This is stuff I have to do because I go very, very long at times, and I don't want to lose my ass. So like you called me in the spring, I was kind of bearish when we were up here in this zone. Took a bunch off. Actually went a little too early into the trade, earlier than I should have, and took a little bit, but mostly, sold pretty good, and then, I kind of got back in around here, which was nice. I did not hedge up here, even though I should have. I sent a text to the group chat after the Ripple thing right here. I was like, guys, this is a great time. It's a great time to sell. Very obvious in retrospect. Look, here's some other clues that you could have seen if you were paying attention here. Talk about our accumulation, manipulation, distribution, our power of three. Here it was again. Here's your accumulation of shorts in here, and then look at what you got. You got a manipulation leg up. You ran all of these highs. You did we run this high over here too? Yeah, we did. We even ran this high. And then what did we get? We got a whole expansion leg down. Right? Again, once you see this stuff, you can't really unsee it. It's possible that right now we're doing a little mini power of three, right? This down here is a super interesting zone of interest, right? This is where the big up move came from. Price never tapped into this zone yet, right? So it's highly probable that we get a reaction off of this zone and we don't just like go straight through it. So If you're a short-term trader, you can mark this out as a zone of interest, and you can observe. You can be like, I might want to go long on a reaction from here. And then what do you have? You've got, sideways accumulation. This right here, potential manipulation, run all these highs. And now you've got to break a structure. You can zoom in on the hourly here, and you can kind of see this a little bit, right? But you get a run to the side. You break structure to the upside. You get a retrace into this zone that gave you the structure break. And look, you can kind of get an entry here into this zone. And now you're playing an expansion move to the upside. I didn't take any of these trades. I've been traveling and playing pickleball, so left some money on the table here because this in my opinion was kind of like an obvious trade, at least up to this level here. I think we take, but like I said, good chance we take the June mid-range up here. And I'm thinking of this shorter time frame trade again in the context of this higher time frame leg down, and thinking like, I want to get short in a retrace of this leg, which is likely to happen here above the 50% level. Nick is informing me that we have a meeting in 2 minutes, so I may have to, I don't know if I'm cutting this short actually. I guess we went for an hour. Really bad at planning an agenda. I've got 7 more items here on the episode 1 agenda, so that it goes to show you how good I am at planning my time out. But anyway, I hope that was useful for you guys. I hope you enjoyed this. If you did, and you're not currently subscribed, please subscribe. Always like the video, turn on notifications, do all those things. If for some reason you guys aren't following me on Twitter, I'm Steven Cesaro on Twitter. You can see that in the description. Also hanging out in the Alfalfa Podcast Discord, alfalfapod.com. You can find the link to that if you want to chat with me there. I hope you enjoyed this. If you enjoyed this, let me know in the chat. Let me know in the Discord. I think I'd like to keep doing it. It's good for me. I like to kind of get my thoughts out there on the page. My goals for you guys to like learn something. To not. I've been told I talk with too many acronyms and stuff, so I'm gonna try to make a effort to dumb it down a little bit more and make some of this like actionable / educational. But if you have any stuff that you want me to talk about next time, I don't know when next time will be. Like I said, I am getting on a plane flying across the world Saturday, so might not be able to do this again for a couple weeks. I'll see if we can do like another impromptu stream maybe on Thursday or something, and if that's the case, let you guys know on Twitter and in the Discord. But otherwise, I'll probably see you for first week of October. So hopefully we're not too much lower by then, but we'll see where things shake out. So thank you everybody for joining in the chat. It was super cool to have so many of you here for the first episode. Makes me feel good. Thank you, Maddie. I appreciate your appreciation. Bye, Calcium. I will see you guys tomorrow on the Alfalfa Pod live stream. Was that 5 o'clock Pacific? As per usual. Looking forward to being back, and I will see you guys next time. Peace.